Dow Jones Industrial Average fell 1,175.21 points to 24,345.75. The S. New York, U.S. stocks plunged in highly volatile trading on Monday, with both the S. The declines for the benchmark S. The question now for investors, who have ridden a nearly 9-year bull run, is whether this is the long-awaited pullback that paves the way for stocks to again keep rising after finding some value, or the start of a decline that leads to a bear market. A lot of people who have been in this market for the past 3 or 4 years have never seen this before, said Dennis Dick, a proprietary trader at Bright Trading LLC in Las Vegas. The psychology of the market changed today. It'll take a while to get that psychology back. After regular trading hours on Monday, bulls argue that strong U.S. corporate earnings, including a boost from the Trump administration's tax cuts, will ultimately support market valuations. Bears, including short sellers that bet on the market decline, say that the market is overstretched in the context of rising bond yields as central banks withdraw their easy money policies of recent years. The U.S. stock market has climbed to record peaks since President Donald Trump's election, on the prospect of tax cuts, corporate deregulation and infrastructure spending, and it remains up 23.8% since his victory. Trump has frequently taken credit for the rise of the stock market during his presidency, though the rally in economic recovery was well underway during the Obama administration. As the stock market fell on Monday, the White House said the fundamentals of the U.S. economy are strong. U.S. economic growth was running at a 2.6 annualized rate in the fourth quarter last year, and the unemployment rate is at a 17-year low of 4.1%. On Monday, the financial, healthcare and industrial sectors fell the most, but declines were spread broadly as all major 11s. All 30 of the blue-chip Dow industrial components finished negative. With Monday's declines, the Dow is down 1.5% for the year. The market's pullback comes amid concerns about rising bond yields and higher inflation, which were reinforced by Friday's January U.S. jobs report that prompted worries the Federal Reserve will raise rates at a faster pace than expected this year. The market has had an incredible run, said Michael O'Rourke, chief market strategist at Jones Trading in Greenwich, Connecticut. We have an environment where interest rates are rising. We have a stronger economy, so the Fed should continue to tighten. You're seeing real changes occur and different investments are adjusting to that, O'Rourke said. The Dow Jones Industrial Average fell 1,175.21 points, or 4.6%, to 24,345.75. The S. On Monday, the declines come after the Dow and S. At one point, the Dow fell 6.3% to 1,597 points, the biggest one-day points loss ever. Even with the sharp declines, stocks finished above the lows touched during the session. It doesn't look like people are working their orders, the programs are trading this, Dan Ryan, who works on the New York Stock Exchange floor for E. Investors also unloaded riskier corporate bonds during the Wall Street stock market rout. Exchange-traded funds that focus on junk bonds suffered a third day of losses. BlackRock's iShares iBoxx high-yield corporate bond ETF, which has about $16 billion in assets, fell 0.6% to its lowest share price since December 2016. The CBOE Volatility Index, the closely followed measure of expected near-term stock market volatility, jumped 20 points to 30.71, its highest level since August 2015.